Welcome to Tradespoon. My name is Vlad Karpel. I'm the founder and CEO of Tradespoon. And I'd like to continue our discussion on technical analysis. We already talked about support and trend, and now I'd like to go over resistance. Let's take a look. So first, let's recap, in case this is your first video. What is a technical analysis? Core technical analysis is a study of supply and demand in the market. You're looking at the previous price action and you're trying to predict what will happen in the future. The information helps trader determine the general direction or a trend from a broader perspective. Think of technical analysis, again, it's just a line in the sand, right? You're looking at a certain day or at a certain time and you're trying to see whether the bulls will win or the bears will win based on upcoming event. So if you're looking at the chart and tomorrow is earnings announcement, you're looking where the key support lines and where key resistance lines are. So let's first take a look at overhead resistance. We're providing you with daily chart. For Tradespoon, our fundamental and technical research shows us, based on our quant models and analysis, that the best prediction that we can make is for 50 to 75 days horizon. We have a technology that predicts where the stock is going to be anywhere from 1 to 75 days, but our sweet spot is 50 to 75 days. So that's why you're actually looking at the chart that shows you 60 data points. So whether you're looking at the daily chart or looking at the 60-day chart or a 30-day chart, you want to make sure it corresponds to your time horizon. So what is overhead resistance? As you can see it, you're looking at the Fibonacci retracements, and you see that at 50% retracement, LVS is an overhead resistance. So this is why you're actually seeing the stock at the end of the chart is collapsing and moving to the downside. And the 32% retracement and 50% retracement on Fibonacci retracement is your overhead resistance. This is where the bears are winning because there is earnings announcement, or maybe there is a geopolitical events, and there is no impetus for stock like Las Vegas Sands to move to the upside. So resistance is a price level at which supply is likely to be strong enough to prevent the price from seeing further rallies. In example of LVS that we just went over. As the price approaches major resistance levels become excessively expensive, buyers are less inclined to buy the asset, such as after the earnings event. If Las Vegas Sands missed earnings, then in the next 3 months, up until the next earnings announcement, if there is no binary event, if there is no reason for stock to go up, you will always have some kind of overhead resistance. And this has become your opportunity to sell. Please be sure to visit Tradespoon.com. We have great webinars on a weekly basis where you can learn about stock, options, technical and fundamental analysis. Also, we have great content on Tradespoon video where we talk about Wall Street week ahead and what happens on the Wall Street for the next week, whether it's economic news or economic indicators. We also talk about mechanics of the pick, and the same content you can find on social media where you can stay current on a daily basis. Thank you very much, and be sure to view our free videos where we talk about stock, options, and different topics. Thank you.